What's up, guys? It's Brian from HASHWAREHUB. It's about 9:35 p.m. Eastern Time, December 28th, 2017. And we are looking at Bitcoin. This is a dollar chart. But first, hit those subscribe buttons, the notification bell, so you get our information directly in your inbox there, so you don't have to fish all over YouTube for it. And yeah, so not really sure what we're going to make this video of here. I think possibly just maybe about this little rebound right here and what's happening. Okay, I think this sell-off here, I think, scared the bejesus out of a lot of people. I'm not so sure why. I mean, this is just a normal retracement. Maybe because they got their nerves so rattled from this large sell-off here and then this sell-off here, and then maybe they thought it was all over because the market was running up, and then all of a sudden, boom, the market ran down and had this big correction. So I think what that shows me is that there's a lot of people in the market that really aren't familiar to trading. And it's not a bad thing if you're not familiar with trading, but if you're not familiar with trading, then you're not able to prepare yourselves for movements like this. And how are you not able to prepare yourselves for movement like this? You're not able to prepare yourself for movements like these because you're not preparing your trading strategy properly. Okay, you're not de-risking, and you're not leaving. Like, one of the advantages of de-risking is not because you have, really lower risk out there. It's one of the major reasons. But the other thing is you get to keep some of your powder dry. What does that mean? You get to keep some cash. You have some cash on hand, so you don't feel that you're fully invested into the market. And so then if you're fully invested in the market and the market goes down, you have no choices. Your only choice is, do I sell now and eat this loss, right? Do I just sit there and pray every day that the market goes back in my direction? Or C, do I go ahead and, ask my wife for some more money? And that's never fun, going ahead and dipping back in for more funds. Okay, that's never fun. And none of those are really good ideas. The really good idea is actually de-risking. I say it over and over and over again. And, it just makes sense. It's the way the professional traders trade. It's the way I was taught to trade. It's the way I trade. Maybe it's because I just don't have the stomach for it to really stomach these big downturns. But you know something? By the looks of the message boards and, and social media, there are a ton of people that don't have the stomach for it either. And, it's not really something that's has to do specifically with this market. This has to do with traditional markets too. It's nothing new. So, we had gone ahead and we had said, okay, we had given through our past few videos, we had given our primary course of the way in which we think that this recovery was going to happen. Well, there's always like a primary course, and then there's an alternate course. And there's a tertiary course, right? In other words, you need to have a plan A, B, and C. And normally we just tell you guys what our plan A is, because I don't want these videos to go on forever and to just put people to sleep, because the attention span is just so long. And I understand that, because I don't I don't have the most exciting voice. So, really what I was showing you was that this was going to be a major, this was going to be a 1, 2, 3, 4, 5. Okay, and we were going to get all the way up to above, this 20,000 level. Now, that very well may be true. It still looks like that possibly could be the case. But there was another alternate plan here that we had, was that this was going to be 5 legs down. Okay, which was going to bring us down to these lows here of, let's say, around 12,000. Could it even go as low as like 10,000, or maybe even originally I was saying maybe 9,000. Okay, depends on like how crazy this gets. Now, it's looking less and less and less that that's going to happen, but it's still a possibility. It's still a possibility. It's always a possibility. As each hour goes by, and we get another piece of information, the probability lessens. However, it's always a possibility. So even now here where the market ran up, I mean, yeah, it's even less of a possibility now. Okay? So, that's what we want to say about this. Another thing too we do all the time is, I'm always learning. I'm always a student of the market, always. I love when people write me and say, hey, what do you think about this? What do you think about that? There's so many things out there that, I get very little sleep as it is because, I just love what I do. Really, really, when it comes down to it, I love this and I can't get enough of this. I've always been like this for decades. So, I don't know. I don't really know of doing anything else as far as becoming a true student of your craft. You just need to put in time. So one of the things I stumbled across here was this squeeze momentum. I think that's what it stands for, is SQZMOM. You can find this on TradingView, and I thought it was pretty cool. If you ask me, I mean, it's self-explanatory. I didn't read anything about it, but it's pretty straightforward. I mean, there's the green means the market's going up, red means the market's going down, and it appears that when there's a change of color, I mean, going from like a lighter red to a darker red, or a lighter green to a darker green, it looks like it's kind of the end of the trend, and it's pretty cool. It doesn't seem all too predictive. But, in combination with other things, it looks like it may be able to help us. So maybe we'll kind of loop this in and see how we can use it. Also, I'd like to possibly maybe contact the person who wrote this code and maybe get access to it so I can maybe make a few little changes to it, the way in which we trade. Anyway, with that said, let's go take a look at our other graphs here that everybody's used to looking at. Okay, we're back. So what we're looking at right now is we're looking at the 1 hour chart on Bitcoin. And you can see what's been going on in the past few days. I think this is December 16th where it starts here. And right now it's December 28th. This is the last day here. Obviously, it's almost full, so because the day's almost over. So, and the last bar here is the last hour bar, or the most recent hour bar. So you can see here I'm going to kind of pull you through like the past few trades just to show you, what we've been doing. So you can see here that the market kind of, the trend strength kind of blipped down, right? But, we don't always like taking it when it blips down like that, especially when we've been in a long position for some time and we have the nice blue strong kind of support line there. So we don't always like to kind of go short right off the bat. What we like to do is we like to sneak up the protective stops closer to where the current price is, and that's exactly what we did. Especially since the trend strength, the D trend was kind of going sideways as the market was kind of going sideways to up, and D trend was kind of going like sideways to down. So, it was just a bit of a divergence there. So it was another reason for us to go ahead and kind of pull those stops in. And what we also were looking at as this kind of blip down was that the sine wave indicator was turning south. So we said to ourselves, okay, it's turning south. If the market goes ahead and it doesn't bust below this blue line, below the cayenne line, then there's a good chance that maybe it may have another small run up. And that's exactly what it did here. Okay, it kind of it made it through here, and the trend strength indicator kind of became more bullish again, and next thing we know, the market kind of pulls up here, right, directly in accordance, or 100% correlated here to the sine wave indicator. But then still at the same time, now we saw even more of the D trend, and the trend was still going down, and now the market was going up. So we're like, something's going on. And then boom, really these next 2 days was really telling about what's going on, not only with the market, but exactly what we should be doing with our positions. And we started getting out of our positions really quick. I mean, actually, our stops started getting us out of our positions, really quickly. So over the next, few hours, we pretty much were out of everything regarding Bitcoin. So, the market came down, yada 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 yada, and this was kind of part of that big correction everybody was bugging out about. And we get to this point here, and this point here is where we had the market tick up. It was actually right here, and we're like, wow, maybe it's time to buy. But we're being pretty conservative because the market's trading a little bit differently than it had in the past. It's not completely shooting for the moon. So we're trading more like as if this is like a traditional markets, believe it or not. And what we saw was, okay, the trend was still coming down. Yeah, there was this little blip up right here. We had this little blip right here on trend strength, but the sign indicator was topping out, and it didn't look like it was going to be turning for another few hours. So we were not interested in purchasing right here. It just didn't make sense for us. So we held out for a few more hours, and boom, sure enough, we had a big, large down candle, and a few hours had gone by, and boom, now this thing ticks up. We see there's a little tick up here, and we see the sign indicator right here was kind of turning, and the trend looked like still was kind of in a downward slope, but we're like, something, this may be a position to get in. Now this gets into part of what's called laddering or legging into a position. So you don't want to go in unless you're trading like 50 or $100. You don't want to go in like all at once. You want to buy some and then buy a little bit more. If the market runs down a little bit, you buy a little bit more. And this is perfect case point of exactly how to go about doing that. So we purchase a little here, and then the market, we said to ourselves, chances are the market's gonna run a little bit lower. We weren't sure if the market was gonna stop here. Remember the Elliott wave analysis that we had just done prior. So we really weren't sure what's going on. So we're like, let's go ahead and make a better price. So we actually had, I think it was right about here. It was about 12,700. We had a limit order, and if the market were to gap down, it didn't gap down. Not nearly enough, but it was enough for us to say, okay, it was a good thing we didn't buy our full position. And then we have kind of this up, whoopsie daisy, this kind of up and down, and the trend strength goes, bearish again. But at the same time, what we like to see is that there was kind of like this, cupping effect from D trend, and at the same time, MACD started getting really tight, right? So we're kind of happy. We're like, oh well, okay, maybe there's a chance that things may be going positive again. Okay, then all of a sudden, boom. Trend strength, had a nice solid uptick. I mean, this is like how we like it. Same thing how it was here, but it wasn't the right time with respect to the sine wave indicator. So, and now MACD is positive, and now the trend looks like it's making a run up again, right? But the sine wave indicator, I mean, man. It was at its top, and it was telling us there's a good chance that the market's going to have an interim, down run, and that's exactly what happened. You can see over the next bar, it went down. It went down a lot. I mean, if you think about it, it's like 14,000 to like 13,000 and probably like 300 or 13,400. So I mean that's a sizable percentage move down, specifically in one candle. So, not big. We've had definitely bigger, but when you're trading, you look at these things. So we're like, okay, let's wait and see what happens. We had kind of this bubbling right here. We're already in a little bit in our position. Let's see what's going on. We don't need to be so eager to get in. Especially with what we were seeing on the Elliott wave. We weren't exactly sure where things were going to go. And also this kind of bubbling right here. So we waited to see what was going on, and everything continued to look really good. And what we did was we actually, before the pink line crossed the blue line, definitively, we purchased. We purchased actually right here. Okay, a little prematurely. Normally we would wait to the next bar, but we purchased it right here. We figured, hey, this is kind of good enough, because the trend was going up and everything else was looking really cool. So yeah, we bought a little here, we bought a little here, and we're happy with our position right now, and we're gonna see how things go. But That doesn't necessarily mean that the market's going to kind of shoot for the moon right here. And we're going to show you a little bit about that in just a second right here. All right, so we're looking at the daily chart on Bitcoin again. And not again, but we're looking at the daily chart on Bitcoin. So, you know, a few things really to note here. So if you're not familiar with our videos, you know, how did we know to really kind of get out here? And, look at our videos. We've been kind of beating the drum about, kind of starting to get out right along here. And really, really quick, I'll just get into it real quick. Market was going up. The trend was going sideways. That's one of the major things that tells us something is going awry in the market. Okay? That was one of the major things. So next, let's take a look at where the market is right now. So the market fell off, and now it looks to be kind of moving up again. Now, we don't really feel that it's going to be really moving up from this point going forward. There's a chance that it will, and the Elliott wave analysis, it suggests that's the case, and it may be right. But so far, from what we're seeing on a daily basis, we don't see any indication of really anything positive. The only thing I can really say that's positive is that, the sign indicator has, kind of made a turn, and it's pointing north. But we probably only have like maybe a few more days of this kind of northerly trajectory of actually price based on the sine wave indicator. And sometimes the market completely, especially on a daily basis, completely ignores the sine wave indicator. So it's hard to really say what's really going to happen here. One of the things that I think that does add a little bit more validity to the sine wave indicator is that the direction of the market right now is down. And the way in which sine wave indicator works on a daily basis is that it's better for like reversals of the general trend. So a reversal of the general trend right now would be up. So, maybe it is, telling. This is not to say that possibly that the trend strength may make a sharp turn up and, start getting bullish again. That the same thing with D-trend may start doing the same thing, and the same thing with MACD. But I don't see it right now. So from a longer term perspective, I'm not super bullish on Bitcoin just yet. And, Bitcoin kind of sets the pace for a lot of other currencies that are out there. And I would say it's similar for other currencies too. On a shorter term interval, yeah, there definitely does seem to be some reason to be bullish. And that's how a lot of these things tend to work. When the market sells off, it's usually the shorter time periods that show evidence of a change in reversal and trend. It takes some time until the longer time frames also agree. And it's just, simple, basically, mathematics as to the reason why that happens. So, with that said, I'm going to leave it there. If you guys have any questions at all, leave some comments below or send an email. And hit the subscribe button, hit the notification bell. Sorry that this video went on so long, but I wanted to get a little bit more detail into how we're looking at things from this point forward. Thanks much.